Your Excellencies, distinguished guests, ladies and gentlemen, good morning and thank you to the DMCC for inviting me to speak today, the first Dubai Precious Metals Conference to take place since the World Gold Council opened an office in Dubai earlier this year. The United Arab Emirates is one of the largest importers and exporters of gold. Whilst not a major producer, this country and the wider region is a major processing area, trading hub, and gold consumption center. At the end of last month, the research team of the World Gold Council released our latest gold demand trends report, covering the third quarter of 2023. Global gold demand, excluding OTC transactions, was 8% ahead of its 5-year average. This impressive performance was driven by central banks' record pace of buying. Jewelry demand softened slightly, primarily due to higher prices, and the investment picture was a bit mixed. Buying trends in the Middle East reflected this global pattern. Jewelry demand across the Middle East continued to edge lower in the third quarter as the post-COVID rebound seen last year faded from view. Demand across the region was 12% lower year on year at just under 43 tons. The UAE saw a decline of 15% to 9 tons, due in part to high local gold prices, but also due to the large amounts of jewelry buying last year. The picture for investment demand in the UAE was more positive, with bar and coin demand up 57% year on year. Over the last 3 decades, the gold market has undergone a huge transformation. 30 years ago, jewelry dominated gold demand. Investment was small, and central banks were sellers. Today, demand for gold is much more balanced. Central banks are net buyers and at a record pace. They've accounted on average for 18% of annual demand over the last 10 years, but much more of that in the last 18 months. Other investment demand has averaged about 38%, jewelry demand 37%, and technology about 7%. This balanced market is important because it's the diversity of demand that makes gold so unique. It performs differently to other asset classes, making it a superior diversifier of portfolios. It's also a hugely liquid market. On average, $150 billion of gold changes hands on a daily basis. This makes it more liquid than the market for US T-bills, for example, as well as more liquid than many other assets and asset classes. Finally, as a physical asset with no credit risk, it can be considered to be a safe haven and certainly acts like that often. When we look at the attributes of gold as an asset class, it isn't surprising that we're seeing so much more investment in gold now than we were 30 years ago. But although making the case for gold to investors is an important part of what we at the World Gold Council do, our job goes far beyond this. We also work to ensure gold remains relevant by promoting market innovations and developments to expand access to gold and to ensure that our market across the entire value chain operates at the highest level of integrity. And it is for all of these reasons that we've opened an office here in Dubai. As a wealth management hub, there is huge opportunity for gold to play a larger role in individual and institutional portfolios. As a fintech and digital finance center, Dubai is home to important innovations when it comes to expanding access to gold through digitization and tokenization. And as a major processing hub, Dubai is a key component of our international initiatives to promote market integrity. These can be distilled into the 3 broad areas. Firstly, making sure gold is responsibly produced. The gold industry has a very positive story to tell. It's undertaken much work to ensure that gold is mined responsibly. And when it comes to climate change, gold as an asset class can play an important role in reducing the climate footprint of a portfolio whilst making investments more resilient to the potential impacts of climate change. The World Gold Council has undertaken work to lead the ESG agenda in the gold industry. This includes the developments and the launch of responsible gold mining principles and research into the climate change impact of the gold mining industry. In September 2019, we launched the Responsible Gold Mining Principles, or the RGMPs as we call them. These principles are an overarching framework that set out clear expectations for consumers, investors, and the downstream gold supply chain as to what constitutes responsible gold mining. The principles draw on the wide number of instruments and codes that have been created over the last 20 years, including those developed by the United Nations, the OECD, and multilateral financial institutions. These codes have been hugely important in setting out expectations around aspects of responsible gold mining, and they continue to drive ongoing improvement. The second area is responsible sourcing and trading. The London Bullion Market Association and the World Gold Council have partnered to develop and implement an international system of gold bar integrity, using the latest digital technologies to create an exhaustive, immutable database for all gold. The aim is to expand the trusted, closed-loop ecosystem, which currently exists for the 400-ounce gold bar market, to expand that to incorporate smaller bars, including kilobars. This will help consumers, investors, and all market participants trust that their gold is authentic, it's responsibly produced, and responsibly sourced. Adoption of such a database is also the critical foundation for a more accessible and fungible market that will unlock greater demand. And we hope that all major markets will implement a system for tracking gold. The final area is responsible retailing. The World Gold Council has taken the lead here by developing the Retail Gold Investment Principles. These principles give gold product providers a detailed set of best practices and a roadmap for implementing them. We did this because our consumer research shows that a major barrier to additional investment in gold, particularly in the retail sector, is a lack of trust. It is our hope that the RGIPs will increase trust in the sector and unlock new demand for gold. Since the global principles were launched, we've been working on their implementation at a national level in key markets globally. This includes working with partners in India, Singapore, the United States, and Germany, amongst others. We have started engaging with industry participants here in the UAE and look forward to implementing the RGIPs here in the future as well. Underpinning all of these efforts is digitalization. The digital revolution is upending the entire financial services sector, and the gold industry is not immune to this. We must take advantage of the latest digital technologies in order to transform how we deal with consumers and investors, how we trade gold amongst ourselves and with others, and how we ensure that gold has been responsibly produced, sourced, and traded. Key to unlocking this is the creation of a universally accepted digital twin of every unit of physical gold. This can form the basis of a global gold integrity program. It will make gold more traceable, fungible, and accessible. Resulting improved market efficiencies will lead to greater demand for gold for the benefit of us all. So that is the World Gold Council's vision. The only way that this will be a success is if all major gold markets are on board. And that's why we've opened an office here. And my colleague, Andrew Naylor, will be talking through some of our specific initiatives and objectives and our partnership with the DMCC following my speech. Dubai's got a unique blend of being a major gold processing and trading center, a large consumption market, and also possesses a booming wealth management and digital finance industry. Known as the City of Gold, Dubai will always be an important node in the global gold ecosystem, and we look forward to working together as partners to grow and improve our market. Thank you very much.